Today we're going to answer the big questions. Should I normalize my personal income? Yeah, that's a fun little question that we're going to deal with. You said, Justin, what in the world do you mean by normalizing your personal income? Well, I've spoken about normalization. Normalization relates to financial companies now many different times over the last 3 years on the podcast. We're almost at episode 300 now. For those of you who want to go check it out at financiallysimple.com, and you can look at the podcast as you're watching us on streaming systems today. For those of you who are riding in the car, like I typically do whenever I listen to podcasts, check out the social media world. That's where we're doing live episodes. I shake the camera here in front of me. But whenever I'm talking about normalization of financial statements, typically we're dealing with the idea that we need to adjust some numbers for the purpose of exit planning or for value growth planning. But today I want to retool. I want to change the definition of normalization around a little bit. But in order for me to change it, we first have to describe what does it mean to normalize. So according to the Corporate Financial Institute, here's what they say normalization means. And I quote, "Financial statement normalization involves adjusting non-recurring expenses or revenues in financial statements or metrics so they only reflect the usual transactions of a company." Now keep that in mind. We're going to change that. Financial statements often contain expenses that do not constitute a company's normal business operations, and that may hurt the company's earnings. The purpose of normalization is to eliminate anomalies or to provide accurate historical information that enables reliable comparisons or forecasting. There we go. What does all that mean? We're going to make things normal. In business, things happen. This year, 2020, has been an unbelievable year. Things have happened. Some of us received PPP funding. Others received EIDL loans. Some received grants. And so we would actually pull those back out of the income position for a company this year to reflect how business typically works. So what do we typically normalize when we're dealing with normalization of companies? We typically start off with the owner's salary. You see, owners are often overpaid managers or technicians. It's not uncommon for me. In fact, I just spoke to an owner just a few minutes ago who owns a business, and they're making well in the hundreds of thousands of dollars per year. But if they were to hire somebody to do the exact same thing they're doing, they would not pay this individual the same rate to which they are paying themselves. So typically we would normalize, or we would bring the owner's salary down to the market competition, the competitive rate to what they're actually doing. Another thing we often normalize is owner's fringe benefits. You know, we use life to bolster our lifestyle, and so there's fringe benefits. We're going to talk more about that just in a second in detail. We may have rental expenses. It's not uncommon for us to have business owners who own their property, and maybe they pay themselves a little bit above what may be considered a market rate. Maybe they've rented or have equipment. They moved to an equipment holding company and they're renting it from themselves. We need to adjust that on a typical business statement. We often have non-recurring expenses, such as like a large purchase, or maybe there's a legal issue or a settlement. Dealt with a client just 2 weeks ago that had a sizable settlement they had to pay out in their business, which if you've dealt with business for any length of time, you're going to deal with some sorts of settlement. Maybe it's extraordinary events. So like in 2020, like we spoke about earlier, it's been unusual, totally out of the blue, not something we would deal with normally. So we would normalize, we would change the financials to make it match that which we typically do whenever we're operating business in normal environments. Maybe it's legislation changes. Not too long ago, we had an individual that we helped that was building a particular widget for the government, and a government contract changed, and this one particular widget went away. So we had to deal with that. Buildings burning down. That's another one I've seen. I personally have seen clients who've lost their building due to a fire, and it caused extraordinary expenses that was just abnormal. So that's where normalization comes to play. So what are we talking about whenever we're talking about normalizing our personal income? Let's get there, but before we do, let's hear a word from this week's sponsor.
One day you will retire, and when you do, you will need the money made from the sale of your business to be added to your financial egg basket. In the book, The Ultimate Sale by Justin Goodbread, he discusses how your business is valued, along with ways to increase that value until that day you decide to step away. To download a sample of The Ultimate Sale, go to financiallysimple.com/sample.
So we're talking about normalizing our income. And as we're talking about normalizing our income, we want to be careful, and I want to be crystal clear about something. The IRS clearly states, and we're going to put this in our blog, so you can check this out on the blog, financiallysimple.com. The IRS clearly states that you cannot deduct personal, living, or family expenses as business use. Can't do it. So many times I talk with individuals and they want to deduct things and call it business use, and there's no way in God's green earth this is going to happen. It's not going to happen. But there are some things that we often utilize in our business that does help us in our personal life. So let me give you a few of those to get your mind thinking about how I want you to go and why this matters. So the first one is a car or truck expense. I know many people who have a truck that they are car they also utilize with their business. And you say, well, Justin, that's a business use. That's correct. But whenever you leave or whenever you sell your business, are you still going to have that same vehicle? Chances are not. I just had a client who retired last year walk in. He said, you know what? We really don't need 3 vehicles now. We need 2. I'm thinking about, in fact, I gave my one vehicle to my daughter, and now I'm thinking about trading in another one, and we're going to go down to probably 1 car. I literally just had that conversation. In fact, I told him, I said, dude, you delayed me from doing my live podcast for a second here. He started laughing. He said, oh, get to work. So no, we utilize cars and trucks. We deal with our salaries, like I mentioned earlier, but it's not just our salaries. Maybe you have your spouse or significant other on your company's books, and that's some income that you're providing yourself. Maybe it's a child. Maybe it's some other form of income or wage that you're paying yourself through the business. Oftentimes we deal with supplies. Every business needs supplies, but I often see where some of the supplies make it home. I saw this one individual one time. I said, buddy, you can't do that, but he was nonetheless. He bought a bunch of supplies, let's say toilet paper, for example, and he was using that to stock his home. That's not the way that life works. You have to use whatever you buy for the business. Rent, though, is something that you may be interested in. Oftentimes, I know business owners who rent their house to their business for various reasons. It's not uncommon. We've spoken about that. We've actually had CPAs and tax attorneys on the show who talked about that. If you sell your business or you retire, that rent goes away. You also may have utilities that you're helping pay through your business. So you say, okay, well, I pay 20% of my house is the office that I use at home. Therefore, 20% of my utilities should be a deductible business expense. And technically, you could be right in that circumstance, depending on your particular circumstance. Again, that's a tax advisor question for you. But what happens if the business is gone? You no longer have that help on utilities. Okay, what about tax payments? It's not uncommon that business owners will just dip into that business, so to speak, that bucket here of the business, and grab some extra money out to pay tax payments. Very few business owners think about budgeting and living on a fixed income. I'm using that in air quotes here, but that's something that business owners often deal with. Insurance. It's not uncommon for us to utilize the business to help on insurance, whether it be health insurance or property insurance or some sort of a disability insurance. Those are things that sometimes we use the business to pay for that benefits the business. But technically, if the business wasn't there, it'd be an expense that you might pick up on your own. Travel is not uncommon. It's not uncommon for me to travel somewhere on a business trip and spend an extra night there and only have 1 night worth of personal expenses and 3 or 4 or 5 nights worth of business expenses. And if I'm all of a sudden out of business, then I'm going to have to pay the travel expenses out of my pocket. Whether it be travel, and you got meals and entertainment. When I'm on a business trip, Miss Emily will accompany me sometimes to show for me. That's what her job is. And don't you tell her I said that, because then she'll get me. But no, sometimes she travels, and I'm working as she's driving. She's paid to drive me from one location to the other, and I'm working. We get to location, and we have a meal together. Well, that's a business expense. Well, all of a sudden, if she and I are traveling across country on vacation, and I don't have the business anymore, now I got to pay for that meal out of pocket. It may be legal and accounting. It may be entertainment. One of the ones that we often forget about is carryovers. We create losses in our business sometime when we buy things that create deductions, thus giving us a false sense of taxship or a tax bill years to come. Therefore, we need to consider carryovers or depreciations. If we buy a piece of equipment or depreciate in 1 year, our tax bill may not be that large. Or QBI deduction. There's so many things. I'm getting to the point here There's so many things that we business owners benefit from in our personal finances. Now, like I said before, the IRS has made it really clear that we have to use business expenses only. We can't use personal expenses and claim them as business deductions. It doesn't work on that. What am I driving at? In this particular season on the podcast, we're dealing with this idea of fears business owners face. In last week's episode, we spoke about the wealth gap and how a wealth gap is like walking up to the river. We're standing on one side of the river and we're looking across and we want to get to the other side. And we identified that the side that we're presently standing at in this river metaphor, or this parable, so to speak, that is where we currently are financially. And we want to reach to the other side. We know that one day we want to retire. We know that one day we want to sell our business. We know that one day we want to do X, whatever it is for your X. In order to figure out the dimensions or the plans for the bridge to get you from one side to the other, we have to clearly know where we are today. So why am I telling all this wealth gap and normalization? Look, I want you to take stock in what it actually costs you to live your life. Have you looked at it? Have you done an actual expense adjustment to see your mortgage is this, your food is this, your clothing, your insurance, your entertainment? Probably not. Probably not. In fact, in our firm, we actually have to use software that helps us track this, for myself included, that goes in and says, hey, Justin, you spent X number of dollars per month in just living. Now remember, all these different categories, I just gave you 14 different categories of areas that we might look at in our business that we're actually spending and we're benefiting from in our personal lives, but yet we're not really spending it out of our personal account. So for example, I'll go back to my meal example. Miss Emily and I, we went to Chicago earlier this year to do a video shoot. It was a public speaking engagement. By the way, I love to speak. If you need somebody to speak, just let us know. I had a public speaking gig this last week. It was outstanding. I loved it. I loved getting on stage. But we drove up to Chicago on the speaking gig, and while I was there, we had a meal together. Yes, it was a great date. It was great. It was good to have my sweetheart outside of Knoxville. She needed a break, but we paid for a meal together. Well, that meal is a business expense. Again, if I'm not in business anymore and Emily and I want to go to Chicago and we want to have a meal together, now that's an expense I have to pick up in my personal budget. So my challenge to you is this. In order to determine your wealth gap, the amount of money that you need to reach your goal, we're standing on one side of the river, get to the other side. How much wealth do we have to have? In order to determine that for your particular circumstance, we have to realize how much money we're benefiting from coming from the business in through our lifestyle. Because most of us work through the business and we literally live and breathe business. So we need to take stock and figure out, okay, if this business was not here, what would my life look like? Now, I warn you, that is one of the hardest exercises for me personally to walk business owners through, because I'm one, and I realize how much I like to try and defend how the way that my accounts work. And my tax advisor, they walk me through this and protect me, make sure we're doing all right. But it's hard for me to realize how much it really costs to live. Every person says that. Every single time, no matter where they're at in life, no matter what their income is, everybody says, man, it's hard to live. And you're like, Justin, there's no way. I'm making $100,000 a year, me and my family, and we're doing everything we can to get by. Guess what? The person who's making $1 million a year is saying almost the exact same thing because they're spending at the same level. They're spending at a percentage ratio. And the person making $50,000 is doing the same thing. So my challenge to you is this. Let's look at exactly what it takes for us to operate our lifestyle. Build a budget. And if you know your budget, now you know one of the key pillars to help determine this wealth gap. You know how much it's going to take for you to live on at some point in the future. Whatever that future goal is, you're going to be able to determine that. So that's this week's episode. Should you normalize your income? Yes, you should. You should go in and figure out exactly how much money it takes for you to live the lifestyle that you want to live. And you got to pull it out of the business. Now, next episode, we're going to talk about inflation and how inflation affects us business owners. You're like, Justin, man, you got some exciting topics. Trust me, it'll blow your mind on the impact of inflation. In fact, it should scare the devil out of you, as my grandmother would say. Son, it's going to scare the devil out of you. It should scare the devil out of you on how much it's really going to take for us to reach our goals. As business owners, we often work on everybody else's life first before we reach our own. Now, look, if you need any help, reach out to us. This is what we do day in, day out. Every single day we're working on this. If you need help, reach out to us, financiallysimple.com. You can check us out there, and you can go to Work with Justin. But until next time, I realize life is hard. It is, but life is good. Life is good. It's beautiful outside. Hey, I got to cut the yard in the rain the other day on the tractor. Literally, I'm up on the tractor, and it is pouring. I mean, my boots, when I took them off, it had like 2 inches of water in the bottom of my boots from riding on the tractor in this downpour. It was outstanding. I even made the kids clean up a chicken coop and stuff in the rain. Yeah, I'm a mean slave driver, but life is good. We created a memory this last weekend. I'm sure you did as well. Life can be frustrating, but money doesn't have to be. Let's continue to make our lives at least financially simple. Hey, y'all make it a great week.